But with interest rates where they are, if they continue to spend and spend and spend and spend, at some point the rubber has to meet the road. Interest rates have to rise. This is a very precarious position that they're trying to dance upon, because ultimately you're looking at the whole system blowing up. So what does it mean for precious metals? I think it means that to have your wealth solely in dollars right now is a massive, massive mistake.
Hey everyone, this is Rob Keens with goldsilverpros.com. We're recording this on Wednesday, March 31st, 2021. A very special returning guest to the show, Andy Schectman and Miles Franklin. Andy, how are you doing today?
Great to see you, Rob. I'm doing well, thank you. How are you doing?
I'm doing very well. First of all, thanks for joining our conference in January. It was a big success, and love to have you as a part of that. Always great to interview you because, unlike a lot of people in this space, you really understand the fundamentals of why people get into the precious metals. So definitely appreciate your contributions.
Oh, I'm happy to be asked to be part of it. I'm honored, actually. And as I told you when we were offline, I think your research and what you're putting out, your content, is second to none these days. In many ways, you are unique to this space also, as I told you, and I find it very refreshing and easy to listen to and incredibly informative. So thank you for giving me stuff to talk about as well.
Yeah,
Your hard work
absolutely.
is
Thank
certainly
you.
paying off.
Appreciate that. That's a high compliment, and I appreciate that. I wanted to bring you on the show today because, as a follow-up to our conversation in January, we were talking about the value proposition for precious metals and why do people get in. And now what we have with this new administration is a ton of spending. We had Biden spending 1.9 trillion, which they called a relief bill for the virus, but in reality, it was a lot of prize projects and partisan projects that they wanted to pass. And now we have some additional spending. I'm going to actually throw this up on the screen. They're doing another 2 trillion in spending, as this just came out on CNBC. So 2 trillion in infrastructure plan today, and they were talking about maybe doing 2 stages of 2 trillion. So this could end up being an additional 4. But this one is there's 621 billion into transportation, 400 billion for elderly care, 300 billion for drinking water, 300 billion into retrofitting housing, affordable housing, upgrading schools, 580 billion into American manufacturing. And the way that they're going to pay for that is through an increase in the tax rate. So the key thing here that I wanted to highlight is they're going to raise that corporate tax rate to 28%, which is going to make it hard for our companies to compete on the world stage. And it's going to reverse some of the initiatives the last administration had. So now, the 1.9 trillion, the additional 2 trillion, that puts us about 4, with a possibility for another 2 trillion coming later, paid for supposedly with a hike in the corporate tax. I just wanted to get your thoughts on what does that mean for our economy and what does that mean for gold?
Well, I mean, you got an economy that's been eviscerated already. A lot of these corporations are hanging on by a thread as it is, and now you just effectively not only make them more or less competitive, you hike up their costs. And it doesn't end there. They're going to raise not just the corporate income tax. They're going to raise the stock transfer ability that's going to be taxed. They're going to raise the taxes on dividends, and they're going to raise the tax bracket on anyone who's making substantial money. I don't know what the level they're going to call, 400, 500, whatever the number is, but hiking up taxes is not the way to fix this problem. In fact, it's the opposite of what needs to be done. Look, it took this country 300 years to create about $800 billion in wealth, and they're creating trillions out of nowhere. A trillion seconds ago is 31,688 years ago. And they're spending trillions like it's just growing on trees. It ultimately leads to the destruction of the currency. There's just no way around it. And ultimately to higher interest rates. It has to lead to higher interest rates with what they're doing, which, any way you look at it, I think in this case, it's different than, it's more complex than just saying, what does this do to this? Because you have a situation right now where so much of the economy is inversely correlated to the interest rate market. And you have stocks and bonds and real estate all positively correlated. It used to be that stocks and bonds were inversely correlated. But with interest rates where they are, if they continue to spend and spend and spend and spend, at some point the rubber has to meet the road. Interest rates have to rise. this is a very precarious position that they're trying to dance upon, because ultimately you're looking at the whole system blowing up. So what does it mean for precious metals? I think it means that to have your wealth solely in dollars right now is a massive, massive mistake. And
Mm.
ultimately, precious metals have to be a benefactor of that. And if you take a step back from that statement and look at what's happening on COMEX, which you've done a great job of showing, look what's happening with the central banks, the commercial banks, the sovereign wealth funds, and the family offices. For the past 4 years, they have all been taking possession of metal, buying a lot, pulling it off of the exchanges. As you mentioned the other day, the money's actually, or the metal's actually leaving the COMEX building itself, which is something that I think is very big, because last year I wondered why, with all of these deliveries, is metal not leaving the building, and now it's beginning to leave the building. And I take a step back and I say, you have the most successful, well-funded, well-informed, influential traders on the globe that are doing just that. They're front running what we're talking about right here, and that is the evisceration of the US dollar. And one other thing I would like to make mention, and when we talk about how does this play into the role of the dollar and precious metals, one of the things that I think people really need to think a little bit more about, and you talked about this again in your podcast last night, I think, and that is the Chinese Belt Road and Rail Initiative, which is roughly 65 to 70% of the human population, 45 to 50% of global GDP, if my numbers are correct, somewhere in that neighborhood, where the entire infrastructure, which the US dollar is not part of, is being funded, if I'm not mistaken, by the Chinese digital yuan. So you have all of these contracts that are settling outside the dollar. You have 65% of the world who is basically being indoctrinated into another system. And that's why I believe what you are seeing is the beginning of the end of the dollar as the singular world reserve currency. What does that mean for gold and silver? You tell me. Look at what the big money is doing. So ultimately, each piece onto itself used to have different meanings. In a normal environment, things would have different meanings. But in this environment, I think it all boils down to the state of the dollar. And the other things will, on the periphery, will still be there. But what happens to the dollar, and what you are seeing is destruction of the dollar, plain and simply, or watering down to a tremendous effect. And when we get that velocity, when we see that inflation, things will start to really heat up in spades as it pertains to precious metals. But I guess for me, it boils down to, what amount of money do you want to leave in a currency that's literally being destroyed right in front of us? That's the way that I look at it, Rob. And I think the rest will fall in line, including what that means for precious metals.
Yeah, I agree wholeheartedly with you. And I think the plans of the banking establishment and central banking establishment, IMF, BIS, is to move into digital currencies. I think they're aware of what you're talking about. It's going to be the end of the paper currency era, not only for the US, but I think eventually it's going to spread worldwide. And I think they want to get to the digital currencies. The danger there is when you go to that digital currency format, the ability to print that, or even to retract currency from the market, retract liquidity, is going to be in the hands of bureaucrats with no conventional control over that. So I think gold in that scenario becomes even more important. Even silver. Silver is really the poor man's gold. It's what the average everyday person can afford. And I think that's why we're seeing these movements, into silver. And I wanted to ask you about one more thing. It seems as though we may be having some shortages. We now have a report from Chris Powell of GATA that the Mexican Central Bank is reported to suspend production of the silver libertads. We've seen some problems with delivery at the Perth Mint. We've heard about other Australian providers. ABC Bullion was in the news with not providing silver to their clients. So from your perspective, where are we on silver? Is there a lack of a general availability of silver? Is that why, we're having trouble minting coins and getting it from these storage companies, or what's going on?
Well, yeah, I think there is lack of availability for immediate production. It's very interesting in the respect that we're seeing these puffs of smoke, I guess you could say, coming up in different places. The Royal Mint, the Perth Mint. You're seeing this, what Chris is saying here in Mexico, ABC Mint. since the beginning of the year, the US Mint has been the model of inefficiency in the respect that in week 2 in January, they run out of gold buffaloes and eagles,
Hmm.
silver eagles. I'm one of only 27 US Mint representatives in the world. And I'll tell you, these products are ridiculously expensive and almost impossible to get. So you see huge premiums on everything, platinum, gold, silver from the US Mint, long delivery delays, no lack or no real direct line of communication. Everything as well. We don't know what's going to be on the next allocation. We don't know. We don't know. Rumors, innuendos. I was told by someone that I respect quite a bit that the mint was going to shut down. And there are people saying it's not going to shut down. All I can tell you is this: they're in disarray, all of them. Something's going on that really doesn't make sense. As it pertains to the Perth Mint and the UK Mint, they've been wonderful for us here in North America for large quantities. And I've bought a lot of both the UK Britannia and the Australian Kangaroo 2021s. But, whether you see what John Adams is talking about or the dozens of emails that I've received from people validating exactly what he's talking about, it seems that something's going on at the Perth Mint for sure, and the UK Mint, for where they're just almost ignoring their retail customers at home in favor of their big North American wholesale business. Does that mean something? Does that mean that there's problems on the horizon? Yeah,
Hmm.
maybe. More disconcerting to me is the ability for people to not be able to convert from unallocated to allocated. And I've
Hmm.
talked about this for a long time, and
Hmm.
I've run a storage program with Brinks in Canada and North America, really, and now in the US, originally in Canada, now in the US also, where I'll tell you 100%, there's not a damn thing in this industry that's free, and especially a brick and mortar storage facility. When you talk about the Perth Mint and the way that they were storing things, they use it in terms of working capital or gold in working form. Well, that could be a Dore bar that just came in the door. That could be a gold kangaroo and anything in between. And when times are normal and you don't have to worry about, everyone rushing for custody of their metal or for allocation of it, fine. Free is good. I mean, or is it? Because all of a sudden, when things change and now you want to fabricate, you have a problem. You have a problem because now you're at the back of the line. But this is nothing new, mind you, because last year, Rob, when I'm sure you remember when there was a disconnection between the London price and the COMEX price, and the COMEX was running into problems, rumors about them running short on gold. The COMEX or the Perth Mint came to the rescue and sent in kilo bars a tremendous number of bars over to the COMEX. They were making the London good delivery 400-ounce bars as part of COMEX delivery. They changed the rules on the fly. When that happened, the Perth Mint came to the rescue and sent tons and tons and tons. If you Google, it'll pop right up, of gold to the COMEX. Well, there's a gal that works for Agora, who very nice gal. I've met her several times at the Sprott show, and her name is Shay Russell, and she's does something similar to what you do, except for Agora. And she told me the exact same thing that people are saying about silver right now. She was saying about gold last year. People couldn't fabricate from unallocated to allocated, and anyone who walked in wanting to buy small pieces of gold were told 3, 4, 6 months. This was a common narrative that she was talking about last year. So the bottom line is simply this: is that there's something going on, and one of the things that makes me think a little bit differently about this, maybe than the way that a lot of people are, is yes, this is happening, but it's happening at a period of time when, yes, there's a whole lot more interest in the metals and a lot more exposure. But, if we go back to, uh, let's call it January 2020, January 2020, there was 0.5% allocation across the entire financial matrix to precious metals in the United States, from the Harvard Endowment Fund all the way down to the little guy on the street. 0.5%. The mean average over the last 40 years has been 2.5% allocation. And we are moving in that direction, I do believe, where people have just 2.5% of their assets are in precious metals. Well, what happens if it gets to be 5 or 10? In 1980, it was 8. With $850 gold and 850 on the Dow the last time they crossed 1-to-1. What if we see an 8% allocation? Doesn't sound like a lot. That's a 16-fold increase in demand in this industry. It'll blow up overnight. So when we talk about all of these things happening, my initial thought in the back of my mind, and I've yet to really articulate this, is simply that we are regressing to the mean. We are getting closer to the world possessing a small percentage of gold and silver. Even at 1%, there's nothing left for everyone else overnight if it's global. So that's kind of what I see happening, is that when we talk about this move, this squeeze, yeah, we don't want to go try to attack the bullion banks, SLV and COMEX, because we'll lose. They'll change the rules on us. But if we go and we start pulling out all of the silver everywhere off the shelves and convert from these unallocated derivative type products into real metal, overnight it will spill over into the COMEX. And that's when you'll see real change. So I will say to you that what you are seeing is real. It's been validated to me on many occasions recently by people all around the world. But what I will tell you, the interesting part about it all that's hard to wrap your mind around, is that they have delivered in huge quantities to us for their North American wholesale business. I have bought 125,000 silver kangaroos this year, and have received the majority of them. Then the next batch of them comes in next Monday. They've already cleared customs. So they have delivered. Now, 125,000 ounces isn't that much globally, but my point to you is that what I'm seeing is different from what other people are seeing. I'm getting product when other people are swearing that they're not. So what does that mean? Is that a beginning of a problem? Perhaps, but all of it to me is a byproduct of more people trying to buy 1 or 2 or 3 ounces, and that is having, I think, a measurable effect. And I think that will have a huge effect as it continues. And if it just expands a little bit, 1%, 2%, 5%, it'll have massive effect.
Yeah, and I'm glad you brought that up, Andy, because on our live stream Sunday, we had a person come in and ask about my thoughts on the PM suppliers. And I'm going to read you what they asked. He said, Rob, what's your thoughts about PM suppliers buying up all the stock? And then when the individual buyer tries to buy, they're told to wait. In the meantime, the very same PM suppliers who bought up everything are pumping stories about shortages, only for them to gain when people are forced to buy at inflated prices. I think there still is that perception for the retail buyer. I think a lot of what you just said talked to that. But in your opinion, do you feel like the industry, the retail industry, is holding back at all some of their stocks and inventories?
That's a very astute comment, actually, because almost like someone knows the inside of this industry, because I will tell you that the big primary distributors have been guilty of doing that in the past. Mm-hmm. They have. They're not doing it now. Okay. They're not, because I work with them all and I see what their supply looks like. I can see the depth of their supply, and they're not doing it now. They're struggling just to meet. When I call a primary distributor who's already charging prices 2, 3, 4 times what I used to pay for them in 2019, and I tell him I have a $3 million order, he's going to want to produce that metal, and it's I can't. I'm sorry, I don't know. When I say I want $3 million in gold buffaloes, I don't know. I'll have to let you know. This is coming from one of the biggest distributors in the world. So they're not holding it back. But I will tell you, in years past, I do believe they've been guilty of that, where they see what's happening, prices dropping, and the demand increases. They do hold it back. I don't believe they're doing it right now. Honestly, I think it's the opposite of that. I think they're trying to get whatever they can. I would remember when we would buy 50 or 75,000 ounces, and my head trader would start sweating and say, what are we going to do? I mean, are you going to be able to sell this? We don't. Mm-hmm. And now we buy as much as we can. If it's not nailed down, we will buy it without a second thought, because the demand is that strong. So I think they would be cutting off their nose to spite their face. But in the environments past where there wasn't this kind of demand, not even close to it, yeah, they were holding back to get higher premiums, but not now.
Yeah, and kind of an extension of what you said before, you were talking about allocation in how many people own stocks of precious metals. Right now, it's about 0.5%. A historic mean has been about 2.5%. And that historic mean, I wanted to point out, has occurred when the dollar was a pretty stable reserve currency. What happens if the dollar is no longer a stable reserve currency, or it's challenged by other currencies? What happens to that allocation of the precious metals?
Yeah, well, it has to go higher. It just has to, because the alternatives are fewer and further between. I gave a presentation in 2 years ago in Vancouver at the Sprott conference, and I had a chart. A client of mine owns one of the NBA franchises and has a bank account with JP Morgan Private Wealth. It's the division of JP Morgan that works with the centimillionaires and the billionaires. And he sent it to me, blacked out his name and sent it to me. And I put it up on the screen for the attendees to see. And basically it was a chart. It was a very small paragraph of verbiage and a chart. And the chart went back to the 1400s, showing all the world reserve currencies. And the verbiage base and all of these world reserve currencies typically had a 40 to 50 year lifespan. We closed the gold window in 71. We're on borrowed time right now. And so basically what the verbiage said is, we want all of you, our depositors, so you're talking the wealthiest Americans in the world, that we want you to mitigate and minimize your exposure to the dollar through foreign currencies and precious metals, because we believe it will be challenged for singular world reserve currency status. Well, if people believe that, where do you go? Well, look at the rise of cryptocurrencies. That's where a lot of money is going. Where else do you go other than precious metals, which has been wealth for 5,000 years? I don't know. Where do you go? In an environment where stocks and bonds are at all-time highs in bubble territory and positively correlated for the first time I can remember, with interest rates where they are right now, normally when people would get scared, that's where they'd go. They'd go to the bond market, but that doesn't work right now. When you have real interest rates in negative territory, it doesn't work at all. When I started in this industry, Rob, in 1989, $1 million, you could put $1 million into U.S. Treasuries at, call it 9%, and make $90,000 a year off of that without touching your principal. And now it would take, what, 7 or 8 or $9 million to get that same amount, even a little bit more, maybe 9 million to get that same amount. And so fixed income is dead. Where do you go if you want to try to protect yourself right now? And especially if it's outside the dollar, all fiat currencies are deflating or are being racing to the bottom. So other than cryptocurrencies, it's got to be precious metals. It has to be.
Yeah, I'm not sure I would go into the stock market right now, given the problem with this company, Archegos, and their blow up. And it was basically a leveraged product in the stock market. There was a good Wall Street Journal article on this. The founder of this company essentially had previous securities problems in China, and then basically hid his involvement in this fund pretty well until research came out when they started digging into what happened. So right now we're looking at maybe 300 billion, 500 billion. I've seen different numbers thrown around of the losses of this debacle in the stock market. So, you have to be careful going into the stock market, which fund you use, which company you use. It may not really be safe because you really don't know, are you getting into some of these dangerous leverage products? And so I look at the stock markets, not only the valuations, it's the schemes that you see. The schemes are getting bigger. You had the Madoff, and now you're having these bigger and bigger stock schemes where they're trying to leverage the product, searching for return, and people are getting into this because they need return. They need it for their pension fund obligations, or they need it to fund their retirement. And then that's where they get you, and that's where the scam is. So I don't see the stock market right now as being a safe haven. I see it as being a place where, it's that old saying, you're sitting down at the poker table. If you don't know who the patsy is, you're the patsy. And unfortunately, the average stock investor is the patsy of these schemes right now.
Well, and it's tough because, when I started in this industry, Rob, those advisors used to be called stockbrokers, and they used to make a percentage of every trade. And now they're all financial advisors, which is just one test. Now, I don't remember. I used to be one a long time ago, maybe series 25. I forget the number of the test, but many of the advisors out there that are espousing information learn more and more about less and less until they've learned everything about nothing. And they are telling people, that it has to be a 60% stock, 40% bond allocation. And for a long time, that has been a very successful path. But we are at a very precarious position, kind of I don't know, a seminal event where you have all of these extreme valuations that have been fueled by quantitative easing by the Fed, because all the big money, instead of it filtering into the system through lending from the commercial banks, instead the hedge funds are taking it and blowing up the stock market and the bond market and using this free money in essence to pad their portfolios. This cannot end well as far as I'm concerned. And when you see Biden talking about $4 trillion in stimulus programs over the next year, on top of what he's already done, on top of all the COVID relief, on top of everything, when most of the half of the country has been sitting at home unproductive, it's leading to a very bad place. And so I think the bottom line when we talk about precious metals through all of this, the question isn't how much gold and silver should you own, it's what exposure do you want to a currency that's on its last leg. When you see the biggest money in the world repositioning, moving out of the dollar, de-dollarizing, using dollar strength to de-dollarize, using metal weakness to accumulate. See, that's the thing. People are looking at things the wrong way. You're supposed to buy when it's cheap. You're supposed to sell when it's expensive. And that's exactly what the big money is doing. And that's the hardest thing to do. They're de-dollarizing and using the manipulated price of metals to corner the physical supply. And now that they're pulling it off of the exchanges, my beliefs are even more crystallized. When it's leaving the building, when Elvis has left the building, you're getting to a point where it's becoming quite obvious, in my opinion, what the big money is doing. And that's how you win. It's not listening to the advisors, it's listening to your gut. It's listening to you and to Chris Marcus and to Big Swear and the people who are doing that, and David Morgan, and on and on, the people that are telling us what's really happening. That's what people aren't getting, and that's why they're all going to be led to the wrong place when you see what the big money is doing, which is very much contrary to what everyone else is doing. I think that's when it becomes, the old saying, don't do as I say, do as I do. And if you do that, and look what the biggest money in the world is doing, and that chart right there shows it, I think that's what people need to take a step back and start trusting their own intuition rather than an advisor who is looking at life through one lens and not through, many lenses like you do.
Yeah, and a long time ago when I got in the financial industry, I had several licensures as well, and they didn't like gold because they didn't make fees off of gold. It's hard to make fees helping people store gold or buy gold, and they wanted to sit at their desk and put somebody into some passive fund and get their fees and their trailers and commissions. So a lot of the financial industry doesn't espouse gold. Which actually I think works to the advantage of the person who's the contrarian, who's looking at the system and says, you know what, I need to do something opposite because it creates opportunities to get into this sector,
Right.
At an affordable price, which I don't think it'll be for long. Last question for you, Andy. I want to ask you about what you're seeing at Miles Franklin. What are the trends there in terms of the silver and gold buys, and what are people getting into?
90% or more of first of all, we did more business in the first 3 months of this year than I did in most of the years from 2012 to 19.
Wow.
Well over 100 million in sales in the first 3 months of the year.
Wow.
And 90 to 95% of those or more are in silver. Almost everyone is buying silver. Gold is there, but I would say it's at most 5 out of 100 sales we're doing are gold related. They're almost incredibly exclusively silver. And I will tell you that I never would have thought I would have seen an environment that would have surpassed last year, February, March. This last February, a month ago, was the biggest month we've ever had in the history of Miles Franklin, 31 years. And I would like to just mention that comes at a time when everyone was experiencing that kind of demand. And into the market open on February 1st or 2nd, we actually shut down for the first time in 31 years, as did all the online companies, because that small period between Friday and Sunday when the market sleeps, we went into that knowing it was the Reddit deal, and we went into 55,000 ounces long into the close on Friday night. By Saturday morning, had sold 90,000 ounces of silver worth 35,000 ounces naked exposed, shut down. This is the time when Chris Marcus has done a great job showing how all the silver went into SLV and U over those 2-3 days. And that's when the price got, clubbed shortly thereafter. And so I guess all I'm trying to say is simply this, that demand that we saw, that's been consistent, literally consistent the entire time. And it is non-reflective of the price. So I guess I just want people to understand that this is a drive-by shooting. This is a blasting of the price by the cartel that has nothing to do whatsoever with global demand, whether you're talking the COMEX that's seeing metal leave, whether you're talking SLV that's getting millions of ounces backdoored out of it by the commercial banks, whether you're seeing metal being pulled off of the Shanghai Gold Exchange or out of India, whether you're seeing product impossible to get in at the Perth Mint or the UK Mint, or now Mexico shutting it down, or the US Mint being out of product. I mean, look around you. Everything that's happening is contrary to what the price is. They are desperate. And I think if we just keep going, keep pulling an ounce or two off at a time from this level, it's going to permeate its way up to the highest levels, because it has to. All of a sudden, everyone in this industry will have nowhere to go but to the COMEX to get bars to fabricate. And very, very quickly, you'll see prices just really spike based upon the fact that there's nothing left to find. So I guess what I would simply say is, what is happening? This silver squeeze, it's real. And you may not see it right now if you're looking as someone who's not in this industry, as a retailer. I see it because it's getting ridiculously hard to get stuff. And I see all of these puffs of smoke everywhere. And where there's smoke, very often there is a fire smoldering. And when does it become 5 alarm? Well, who knows? But something will trigger it. And then all of a sudden, boom. Oh, yeah, I saw that. I knew that was a problem there. Oh, them too. Yeah, well, they were rumors that well, that's how it happens. And you don't see these types of rumors and smokes, puffs of smoke and all this stuff when times are normal. In fact, in 31 years, I've never seen so many puffs of smoke all around me. So it's happening, it's working, it's having an effect. And the big money that pulls the strings, well, they're trying to keep us all believing it's not working, but I promise you it is. And so, hats off to Ivan and Jim and the Wall Street Silver Group, the Reddit group, and Wall Street Silver, and the guys like you and Chris Marcus and David Morgan and everyone else who keeps getting the truth out there, because it is working. And I think it will overwhelm the system if we just don't give up and trust our gut, and don't look at the price because it's misdirecting people. It is the ultimate tool of misdirection. Look under the hood, look at the workings of the system. That's what you're so good at. And that's why, I like to watch you, because price can misdirect even someone with great conviction like myself, can make you question it once in a while. But when you lift up the hood and see what's going on underneath, oh yeah, well, there you go. I mean, it makes it a whole lot easier. So thank you for what you're doing, Rob. And I'm really, really honored to come on your show and be just a little part of what you're doing.
Yep. Thank you so much, Andy, for that. I appreciate it. I agree with your last sentiments there, and appreciate having you on the program. We'll look to have you on the program again. Thank you for joining today.
Anytime. One last thing, and I'll let you run. I know your listeners out there put a lot of faith in you, so I'd like them to put just a tiny bit in me if they want. Any of your listeners want to email us at info@milesfranklin and say they came from Gold Silver Pros or Rob sent me, I'll make sure that they get the best price in the country on any silver that they want to buy. And right now we're running specials. And so send us an email, info@milesfranklin, say Rob Keene sent me or Gold Silver Pros sent me, and I'll send them back an inventory and an email and make sure that they get the best price in the country. So just my small way of saying thank you to you and to your listeners out there, and keep doing what you're doing. I wish you the best of success. I know you'll keep putting out that great information.
All right. Thanks, Andy. It's good talking to you. We'll talk to you next time.
You too. Thanks.